Is it really halfway through September? Well, finally, it's here, the week that investors across the globe have been waiting for, pointing to, worrying about for months. On Thursday, the Federal Reserve will announce its decision on interest rates, and possibly, just possibly, the central bank will hike rates for the first time in nearly a decade, taking what could be the first step away from an era of ultra-low interest rates, put in place, of course, during the financial crisis. But whether policymakers move is anything but certain. A month ago, many, if not most economists felt the Fed was positioned to hike rates. But that all changed as extreme volatility and uncertainty overseas bled into markets here. Now, just days before the meeting, many are calling it a toss-up. Hampton Pearson takes a look at the factors the Federal Reserve must weigh.
As the countdown to what could be an historic Federal Reserve meeting continues, the debate over whether monetary policymakers will raise rates for the first time in more than a decade has become too close to call. Economic turbulence in China in recent weeks and market volatility has jump-started the debate over the timing of liftoff.
By all the macro fundamental indicators, it's about time. And I think the debate really is more whether the turbulence in the last few weeks coming out of China, other parts of the world, affecting our own markets, is a reason to slow down on this.
Since the last Fed meeting, Janet Yellen and her fellow monetary policymakers will have data showing a rebound in economic growth, a solid job market averaging more than 200,000 new hires per month, with August headline unemployment down to 5.1%. In the next 2 days, policymakers will get new data on retail sales and the other half of the Fed's mandate, inflation.
I think they've made it clear they think of a lot of different things, but the most important things are what's the labor market conditions, which are getting much better, and then what's inflation. And inflation has stayed low, and if anything, looks like it's dropping.
Perhaps the biggest wild card is how markets react to the first reduction in monetary stimulus in nearly a decade, part of the balancing act for monetary policymakers because the markets and the Fed have become codependent. Two Washington wild cards for the Fed. A possible government shutdown at the end of September if Congress can't resolve budget disputes, and Treasury Secretary Jack Lew predicts a face-off with Congress in late October, early November over increasing the debt limit. For Nightly Business Report, I'm Hampton Pearson in Washington.